What's up everybody? Tom here with another video. In today's video, we'll be discussing why these setups that we had during our live stream yesterday meant so much to the market. We'll also be taking a look at our stock market technical analysis for the S&P 500, Nasdaq, Bitcoin, Tesla, gold, and more. It's been wild for gold and wild for Tesla and hypergrowth stock players. But is that all about to change? Stay tuned. Alright guys, well as we like to do on this channel, let's take a look at the movements yesterday within the S&P 500, and I think it's clear to see that tech was back. Tesla up 5%, Google, Amazon, Microsoft, all of the FANG stocks moving heavily, and hypergrowth was back in favor. When we have a look at the indices and we see which ones were performing well, you'll notice it was all about the Nasdaq pretty much most of the day, with a small sell-off near the end with IWM, the Russell 2000. S&P 500 was up just due to tech, but the rest was down, and Dow Jones actually performed poorly. So what does this mean? It means rotation was back in play. Everyone was moving into consumer discretionary and technology, and everyone was moving out of the value-based plays that have been so hot lately, being XLF, financials, and energy and materials, etc. So it was a pretty big rotation. You can see it didn't do too much to the S&P 500 overall, and really it's the type of plays that are going on in the markets right now. This is pretty much standard market 101. This is what happens during most years. It's what happens when you're around in the market for a long time. There's rotations in of sectors and out of sectors, except now it's faster than it ever has been before. Let's take a look here at the Volatility Index. Volatility was down. We saw it move underneath the 20 yesterday. I still don't think this is really showing us too much about the moving markets forward. It seems to me that when we got underneath 20, we were starting to normalize in the markets. And I've said this a few times before, hypergrowth stocks, while falling 50% in many of them, seems crazy and seems terrible. It's actually a healthier market that it did that. If it continued to go euphoric, it would have meant a really bad crash. So because it did pull back, because it had a massive correction in those hypergrowth stocks and tech stocks, it means the market is actually a lot more technical than you may think. Now, I've been pretty correct as this is a community. We've been looking at these 10-year Treasury yield notes, and we've kind of navigated it as, is it a big deal? At this stage, no. We still remain to take a look at this 1.95 to 2.0 for the 10-year Treasuries. 10-year Treasuries, guys, if they go up to this level, remember in 2008, they went up to this level and they bounced back very, very quickly and then consolidated. It's the type of thing that happens after what was a recession into recovery. Yields stabilize, and the market expects this because it's out of the global financial crisis trade book. It really is the exact same thing time and time again. What's also very similar is dollar index recovering after finding some weakness. So are they requiring all the stimulus at this stage? No. The real reason why the dollar index is rising though is because we have stimulus across the world. So every other currency or major currency is really creating stimulus. The dollar has had a lot done to it, but it's also still the major. So it's finding some form of movement up here, and I expect it to continue to bull into something like a 94. And then if it keeps after that, I would think that it goes towards the 96. So 94 is the next target for the dollar index, and then 96. Remember, non-farm payrolls, guys, we'll be live streaming it here on the channel. So come and join us, because non-farm payrolls is this Friday, and there'll actually be no stock market open during that day. It's Good Friday. So it's a very interesting futures trading event. If you're trading the dollar index right now, it's clear to me that we're in an upward channel. Take a look at that. You've got both your resistance sides and your support sides. Very clear technical direction right now on the US dollar. Continue to watch that spot. We'll move over to things that are impacted by the dollar index before we get into our stock market discussions. And first up, Bitcoin. We did this during the live stream, and I'm very, very happy with the technicals that played out here. Have a look at these 4 hours, 4-hour rejection wick. 4-hour rejection wick, massive movements just underneath the 60,000. The most important thing about this is when you go down to a 2-hour and you really consider what all these meant. We had a flash sell-off followed by strong momentum. Flash sell-off, strong buying momentum. And then we have another little sell-off, strong buying momentum. Now on the stream, I was talking about how if we get a little bit above here, we're going to have a nice day trade whipsaw back into just underneath the 60,000. And it's exactly what we did see. Big movement coming through after it edges slightly above. You don't need to wait for the close here. What you need to wait for is a percentage higher than the previous wick rejections. And it came through, nice movement, pushed through plenty of other cryptocurrencies as well. We saw strong moves on Ethereum coming through this very similar pattern, and technical analysis is well at play in the big cryptos at this time. Gold, very strong here, actually a little bit stronger than I thought. I was talking about gold basing out at this 1680 area and then bouncing up to the 1700. I actually expected some resistance here, but yes, the general play was there. If you take a look at the 2 hour, you'll see what I mean. It actually was so explosive. It got to almost the 1700 immediately. All of these double test lows plus rejections, when that got taken out, that 1689, those last kind of like $20 would have been very, very clear to see in the markets. Now, where's gold? It's sitting around that previous level here at the 1710. I think it can go up to 1720, but surely these previous supports will act as some form of resistance selling there. So if it gets here, you're looking for a lightning bolt towards the downside, basically a peak, a trough, a lower peak on a smaller time frame, such as a 15-minute or a 1 hour. And then when that occurs, you could see it selling back down. I expect gold to trade with that dollar index. Remember, the dollar index is in a channel upside. So if it continues to strengthen, what's going to happen to gold? It's continuing to weaken. So it's continuing to really put pressure on that downside. That's the trend for now, as far as we're seeing it through the market. Similar with silver. Tesla bulls, guys, you can celebrate yesterday because it was a day of celebration. 5% up. More importantly, daily close above the 20 exponential and above the 650, 660 area. So now what does this do for Tesla bulls? Well, it makes Tesla bulls bullish into $700. You can now move towards 700 and look towards the 720 light. Now, if you get through 720, we've talked about that several times. That's the real level for a lot of participation in the markets, where I expect big bullish pressure up to the 780, 800 zone, which is a pretty significant chunk in terms of percentages. There's really no structure on the left-hand side that's going to stop it after the 720 area. But if we're thinking about what happened yesterday, it was monumental. You got through the 600 being a support. It went through that 650, 660 like butter, made a 5% close day, and now we look to the Nasdaq to also confirm that Tesla can continue to come with it, and we'll do that in one moment. Here it is, the Nasdaq. This is the chart that everyone should be watching if you're in technology, if you're in hypergrowth, because it's really shaping up well. Yesterday, we trapped at a few points. We trapped it with a series of higher lows coming through into the session. We said that that's a bullish on the smaller time frames. The bearish component was always these series of lower highs that came through, and they all intersected with 13,000. So as soon as 13,000 was broken, what happens? Participation to our favorite area, 31, 75, 76. And it was met by instant selling pressure. You know, technicals work so well when you correctly analyze them, but is it about trend lines? Not really. It's all about the horizontal support resistances. And I say this to people all the time. I can draw these trend lines if I want to, because I understand down underneath, it's the psychological levels and the horizontal support resistance that is most important. So with the Nasdaq today, what are we looking for? Possible pullbacks to 13,000, which should be met by buying pressure. And if it does get through 13,176, we move towards the 13,300. And we all know 13,300 plus is a very bullish sign for the Nasdaq. Things are looking great here on the charts for now. Let's have a look at the FANG. What's going on with the FANG? Well, the FANG went back up to that special area, the 4,500 area. It didn't close above. I don't expect it to do it in one day. It showed very, very good strength. And if you actually break this down and you think about it, all this resistance across the board, all you're looking for is a daily close above 45.13. Once that happens, you're starting to trigger the inverse head and shoulders. You're starting to trigger everything that pushes this not only into the 4,700 zone, but most likely to all-time highs. Things are starting to look much better for the Nasdaq, for the FANG stocks, for tech in general over the last couple of days. And I can tell you, I'm pretty excited for it because this is the type of thing we were playing out and we were discussing on the channel now for the last couple of weeks. We've been talking about the supports, the critical levels, and now we're testing the critical resistance. It's good times. Let's take a look at the S&P 500 now. Is that the more boring index? The answer is straight away yes. And the main reason why is, of course, the S&P 500 has this strange rotation thing going on. When all the money comes out of financials and energy, which is a huge part of the S&P still, then it goes into tech. The problem is the net sum is basically nothing. Look, it looks like the S&P 500 wants to get past 4,000. We've tested the resistance one. We've tested the resistance twice. Notice here, these little rejection wicks. So we have a rejection wick pushing up. We have a rejection wick pushing up, and then we've got another rejection wick pushing up. So if you go into the smaller time frames like a 1 hour and you really think about what's going on there, it's effectively a series of slightly higher lows, all culminating with this resistance becoming support and pressure to be on going into Good Friday this week. So we've got, of course, the Thursday session. The Thursday session is going to be the final session that we see this week. Remember, Friday will be closed in the US, and usually into public holidays, people get excited. The only caveat to that is that we have non-farm payrolls. And we know that sometimes people go, well, that's risky. The results have been mixed out of the US recently. Maybe I want to sell into Friday. Generally speaking, though, this is a bullish week in markets because of the public holiday, because of course, the celebration weekend. And if you don't watch us until next week, then of course, I wish each and every one of you a happy Easter, and I hope you have a great time. Bye for now, guys. Remember to subscribe, hit that like button, and we'll see you in the live events today. And we'll see you for a special non-farm payrolls Friday live stream as well. Bye for now.